my name is Alexander from JetConvert, and we've been doing conversions now for a bit over a year. We've probably done about 1,200 and focused very much on the technical part of the conversions, but in the process found that the human interaction, the management of really moving people across is really important. And so I want to focus on that today. And then at the end, you've got a chance to ask some questions about what we do with the conversion or what it for you. So basically, looking at Xero, the promise is that for Xero, there's lots of paperwork and it's really difficult. And then when people move to Xero, it all changes. It's all organized, it's online. People have much more control because they can have multiple users. There's better cash flow because there's the online invoicing, and basically happier clients for the accounting practices. That leads to higher profits, of course, which is what we all want. So as an accounting practice or a bookkeeper or an enabler to help people move over to Xero, it's really important to be aware of reality. Because while this promise of Xero is true, the reality is often people aren't in that headspace. Business owners don't actually have a problem. They don't like their bookkeeping, they don't like whatever they use, they whinge about it, but they don't really see it as one of the big business problems that will help them move their business ahead, so they often ignore it. A really normal human interaction or human capacity is that we try to avoid change. It's much easier to keep doing things the way we've always done them rather than doing something new. So the imagining to move over to a different accounting system for a lot of people is scary, and they really try to avoid that. Every small business owner is time poor, and so again, bookkeeping or accounting is not on their radar as one of the important things. And then one of the things we found is that there are many decision makers. It's not just one person. It's the business owner who might say, oh yes, it's great, but then they might have an admin person who's been used to a different system for 25 years. And then if you're the bookkeeper, you might talk to your client and say, this is a really great opportunity, but then they've got an accountant who hasn't heard of Xero, or the other way around, or there's the husband and wife team. So often the sales process needs to be made to not just one person, but multiple people. So the solution to move that forward that we found is to underpromise, to really tell people don't overpromise the benefits of Xero, but at the same time tell them about the difficulties to move forward. So in the sales process, we often concentrate on creating value. So not just telling them about Xero, but looking at their business processes and seeing how changing that would really impact them. And often just by talking about that, it is creating value already because the business owner is thinking about it. How are they doing things, and where can they reduce their costs by automating things? Where can they change something in the process to make it easier to achieve what they need to achieve? So the focus is on understanding their needs rather than saying this one solution is what we need to do for you. Is really understanding what are their needs, where are they at, and then helping them to decide on the right step to move ahead. Now the other thing is the long-term benefits. Moving to Xero has a short-term benefit that we all know about, which is the instant access, automation, but the long-term benefits are that they can really see their figures in real time and make better business decisions and therefore become more profitable. So it's also good to add that to the conversation early on so that they know what they're getting into this for, and that along the way you can remind them of that. Now, the other thing that I'm a really big fan of is to tell them up front what the true investment is. So rather than just saying conversions are really easy, really pointing out that an investment in time is necessary to learn the new system, to discover some things that might have been hidden away in the old accounting system, to train the staff, and to spend some money on training and actually getting good conversions done. So the true investment, if that's spelled out up front, then there are not as many disappointments along the way, and the business owner can really make a decision and say, yes, if I compare my long-term benefits with the investment that I have to make right now, then I want to go ahead and be committed to that. So getting ready for a conversion, and this is very much where I see all the accounting partners and bookkeeping partners being really important, and that's why we like working with you so much, is to actually manage the process. So there is the technical part, but managing the people and managing how they feel along the way is really essential. So one of the first steps is to actually involve the team and make sure that everyone who's affected by changing accounting systems knows about it. So if a business owner says, yes, I want to do this, make sure, if you're a bookkeeper, that they also talk to the accountants, or you talk to the accountants, so that everyone who's involved is prepared for it. Or if you're the accountant deciding this with the business owner, make sure that their team is really involved and sold to the benefits of doing this upfront. The next step is looking at the business process. So something really simple is, how does the data actually get into Xero? Are they going to enter their accounts payable or just use the bank feeds and code from there? What is the flow of the data of the paperwork? Really good to start small, rather than planning this big thing of converting the accounting system and the point of sale and the back end. I find it's really good to plan what the pathway could be, but then to start very small, to start with one small step and come to a successful conclusion in that. And that could just be changing the way they enter invoices right now in their current system, or it could be moving their point of sale system over, or it could be moving to Xero, which of course I think is the best first step, because that that informs a lot of the other things that are useful to do. Choosing a date and committing to that date. Really essential. We find some of our partners that work with us, they start off really excitedly and want to move their whole practice across, all their clients, but then along the way it starts being slower and slower, because it's so easy for business owners to get excuses and to say, I'll do it next week, next month, next quarter. So one of the benefits of the way we do the conversions with the history is that there is no need to wait for a specific date. Whenever you want to move your clients across, you can, because you've got the full history either to the beginning of the quarter or to the beginning of the financial year, so that there's a complete mirror image of what's in MyUp to move ahead. So choosing a date, don't choose the end of the quarter. Choose a date that really fits into what happens within the business, and get the business owners to commit to that and move them over. So this explanation, we can't do it yet because we need to fix something in MyUp, I don't think is actually a reality, because we bring everything across that's in MyUp. So all the fixing can be done in Xero, and I think that often that can be done more quickly than in the previous system. So the actual technical part of the conversions, which is what we really focus on, has a few steps to it. One of the important things is cleaning up details. So rather than just bringing across all the things that are in MyUp, we really look at details and clean them up in our automated process. Some examples for that is that we check for contacts which address has a PO box in it, and we make sure that that goes into the postal address and any other address goes into the street address field in Xero. Something else we do is that we check the phone numbers for mobile phone numbers and make sure that the mobile phone number actually goes into the mobile field. Reviewing the accounts, my recommendation is to do that in Xero. The reason for that is that whatever history you have in MyUp, we bring across into the accounts that they have been connected to in MyUp. So when they're in Xero, you've got that history, but then in Xero, it's very easy to archive accounts that you don't want to use anymore and move forward from there. So reviewing accounts, definitely good, but doing that in Xero so that you've got the audit trail of what actually happened beforehand in MyUp. History, so all our conversions always include the history, mainly for that reason that then it doesn't matter when you move someone across, and you can really choose a good point for the business, and you aren't lumped with a big lot of conversions at the end of the quarter. But the question is, how much history is actually useful? Does the business really need to know what they've done 18 months ago? For some businesses, that is good. So it's good to talk to them and to make a decision whether that's useful. So we've got the history to the beginning of the quarter. So at the moment, 1st of July 2013, and the history to the beginning of the financial year, which at the moment is 1st of July 2012. And then when we go into the next quarter, that will change so that the history comes from 1st of July 2013 for the financial year. We also have one possibility to put in monthly comparative balances. So not the full history, but end of month journal entries and invoices. And what we do with that is not just bring in the profit and loss details, but also bring in the balance sheet amounts, so that if you want to run some history on the value of the business, you've got all the data in there. Checking payroll, you probably all know that there are some differences between MyUp and Xero and how payroll works. In all the conversions we've done, I don't think more than 20% of payrolls would have been set up completely correct. So moving accounting systems is a really great time to review the payrolls, and it's mainly that they get out of date because some things change and they're not updated. What we often see is things like employees that are full-time employees not having any leave, or casual employees that do have leave. We provide a list at the end of the conversion that shows you what sort of fields are missing. Often tax file number isn't there, bank accounts might not be there, emails might not be there. So whatever is missing in MyUp, we let you know, so you can add that to really use the full functionality of Xero. Then there are the Xero integrity checks. So probably the biggest one is making sure that the invoices, the sum of the invoices on the conversion date is equal to the trade debtors, and the sum of the bills is equal to the trade creditors. Now in MyUp, you'll know that it's possible to directly code to trade debtors and trade creditors, creating an out of balance. So we always create a invoice or a credit note to represent that out of balance if it exists. So then it's good to look at that and to actually go through it with the client to make sure that that's taken care of. Another thing that happened with us, we had one client that had about 8,000 outstanding invoices and 8,000 outstanding credit notes, and they had just not applied them to each other. So in MyOp, they were hidden away, but in Xero, they were right in your face, and they actually then had to assign them all to each other to really fix it up. So there's some integrity checks in Xero that lead to clients saying, oh, there's something wrong. Not because it's wrong, but because they hadn't seen that in MyOp beforehand, and Xero makes that really visual. So after the conversion, after it's actually done and the user, the client starts using it, there's the first moment of the shiny new, but then often they fall into the dip. It's also a basic human condition that often after a purchase decision, we doubt whether that was the right decision. And especially with something like bookkeeping, which is so intimately connected with the business performance, that can be sometimes emotional, and this doubting the decision is one of the things that happens in the dip. There could be uncertainty about, well, there is uncertainty about how to do things. Things that they were able to do in their old system really easily and without a problem suddenly need to be done in a different way, and they might not know how to do it. Also, they see limitations that they didn't know about beforehand, because it's impossible to explain the clients everything that works in Xero or doesn't work. But when they use it, they suddenly see, oh, you do this specific thing in MyOp, and it's not working here now. And all of that leads to reduced productivity in the beginning, so it actually takes longer to do the books, which is why at the beginning we recommend not overpromising, but saying there is an investment to go through so that they expect this, and then it's much easier to work through it rather than being hit by it. Preparing for the managing the expectations, telling them early on it's going to happen, it's going to be difficult, it's going to take some more time, and getting their commitment that they're going to work through that. Then probably the most important thing that you as consultants can do is hold the client's hand, really help them through that dip, motivate them, answer their questions, and make sure they remember the bigger picture. What is it that they're really doing this for? What are the benefits that they're going to get out of it? And showing them all the things that are better in the new system, rather than letting them focus on the things that are not working quite as they're used to. And then it's really where the exciting stuff can happen, which is to exceed their expectations. So in the beginning, I talked about what the promise is of Xero. One of the things is more control. Now, this doesn't happen by itself. It only happens when the business owner actually uses Xero to its full capacity, and that can only happen if they're guided through in a really good way of what to do. So the more control can, for example, mean that they actually do their bank reconciliation on a daily basis to really see what happens. It can also mean that they look at their management reports on a monthly basis to see what happens. And often it's little things like that that don't take a lot of time and that don't need a lot of preparation, but just talking about it with the client gets them to understand their business better and make better decisions. Better cash flow, that really means using the full functionality of the online invoicing. It possibly means introducing something like eWay or at least PayPal to make the instant payments possible. It might mean introducing a system of sending out statements on an ongoing basis to really chase money early, or using an add-on, something like Data to look after that. higher profits, using the information that comes from Xero to look at where are expenses wasted and where can profits be impacted by changing things. And it's really good to show them what actually happened. Have they achieved higher profits? And I think sometimes sometimes it's easy to forget that the reason for Xero, like I'm really excited about Xero, and I think a lot of us are, but the reason for using Xero is not to have a beautiful accounting system, but it's actually to have a better performing business. So focusing on that and really showing that there's an outcome. And then hopefully that leads to lots of word of mouth and good feedback from clients telling their business partners, so that more people come to you to want your services and move on to Xero.